Imagine waking up one morning, checking your crypto portfolio, and seeing your investment tank by more than 70% while everything else is in the green. Sounds like a nightmare, right? Well, for Pi Network holders, that's not a nightmare, that's reality. But wait, it gets even worse. While Bitcoin, Ethereum, Solana, and others are showing signs of strength, Pi Network is stuck in a brutal free fall with no bottom in sight. Could this be the biggest collapse of 2025, or is there still hope hiding under the surface? In the next few minutes, we're diving deep, not just into the numbers, but into the truth about what's really happening with Pi Network, why it's losing ground, and whether it can survive this freefall. Trust me, you're going to want to stick around to the very end. Right now, across the entire crypto market, the mood is surprisingly optimistic. Bitcoin is holding strong, XRP is showing solid gains, Solana is bouncing back, and Cardano is building momentum. Across the board, it's a sea of green candles as we step into a new trading week. Yet among all this positivity, one coin is clearly missing the memo: Pi Network, also known by its ticker symbol, PI. While Bitcoin edges up by 0.4%, XRP climbs by 2.6%, Solana adds 2.3%, and Cardano jumps 3.4%, Pi Network is sliding further into the red, down another 2.2% just overnight. And it's not just a bad day, it's a brutal pattern that's been happening for months. Even Tron, TRX, which is also in the red today, is having a much better month overall. TRX might have dipped by 1.7% today, but since the start of April, it's up by more than 6%. Compare that to Pi Network, which is currently down a devastating 25% for the month of April alone. That's not just a minor dip, that's a full-blown crash while the rest of the market is thriving. So it begs the question, what is happening with Pi Network? Why is it seemingly dead on arrival? When Pi Network officially launched to the public on February 22nd, there was a massive wave of excitement. After years of waiting, years of mining Pi tokens on mobile devices, the community finally saw the project go live. At first, it looked like it was about to be a huge success story. In just 4 days, Pi surged to an all-time high of $2.78. For a moment, Pi holders and early miners felt vindicated. All that waiting, all that effort, was about to pay off. But the celebrations were short-lived. Almost immediately after hitting that peak, Pi began to fall. And it hasn't stopped falling since. Today, Pi Network is trading around 62 cents, marking a staggering 79% collapse from its high. And here's the hard truth, there's no clear sign that the bleeding is going to stop anytime soon. In fact, things could be about to get even worse. Just today, around 4.8 million PI tokens have been unlocked, which translates to roughly $2.8 million worth of tokens being added to the circulating supply. More supply with no added demand creates heavy downward pressure on price. And considering the market sentiment already surrounding Pi, this fresh influx of tokens could accelerate the sell-off even further. If Pi's price drops below 50 cents, and it's already dangerously close, it would officially be trading under its launch price, plunging it into uncharted territory with no historical support levels to catch it. Once that floor breaks, the fall could be sudden and brutal, wiping out even more value in the blink of an eye. The more you dig into the fundamentals, the clearer the picture becomes. One of the biggest issues holding Pi Network back is its tokenomics. Simply put, the supply and value structure of Pi is weak and unsustainable. Even when Pi was riding high at $2.78, its market cap ballooned to over $12 billion, briefly making it the 12th largest cryptocurrency in the world. Think about that for a moment. A brand new project, still in its infancy, without a fully live Open Mainnet or significant ecosystem adoption, was valued more than major established players. At its peak, Pi surpassed coins like SUI, a Layer 1 blockchain that has real infrastructure, real partnerships, and over $1.7 billion locked in DeFi according to DeFi Llama. The comparison is almost embarrassing. Sway has dozens of decentralized apps, a growing NFT marketplace, and developer activity across the globe, while Pi Network has a mobile mining app and a closed environment with limited functionality. Even now, after losing 79% of its peak value, Pi still boasts a $4 billion market cap, putting it in the top 35 cryptocurrencies by size. For a project with no major utility, that's extremely concerning. It's like watching a house of cards that somehow still stands even after half the cards have been blown away by the wind. And beyond just the tokenomics, there's a bigger problem facing Pi Network. Innovation, or rather, the glaring lack of it. When the idea of Pi Network first started gaining traction, it was hailed as revolutionary, a way for anyone, anywhere, to mine cryptocurrency without expensive equipment, using just a smartphone. That narrative attracted millions. People were excited about a future where crypto could be accessible to all. But now that Pi has launched, the innovation pipeline seems to have dried up. Where are the decentralized apps? Where's the vibrant ecosystem? Where are the partnerships that were supposed to bring real-world adoption? None of that materialized in a meaningful way. And without it, excitement naturally fades. In the world of crypto, hype alone can only carry you so far. Eventually, investors look for real substance, and when they don't find it, they move on. It's important to note that Pi's challenges are not entirely unique. Many crypto projects suffer from early hype cycles followed by harsh reality checks. However, what makes Pi's situation even more precarious is the sheer size of its early valuation. When you're valued at billions of dollars right out of the gate, expectations are sky high. And when you fail to meet those expectations, the fall from grace is much harder and much more brutal. Still, all hope may not be completely lost. Crypto is a world where narratives can change overnight. A single big announcement, a strategic partnership, or a groundbreaking development could shift the momentum in Pi's favor. But right now, Pi Network needs more than just promises. It needs real, tangible progress. It needs to show that it can build an ecosystem that actually drives usage, that provides value beyond just being another speculative asset. Without that, the selling pressure will likely continue, and the $4 billion valuation will continue to shrink until it matches the actual utility being delivered, which at this moment, isn't much. Investors need to be extremely cautious. It's easy to get caught up in community loyalty and the dream of what Pi could become. But at the end of the day, smart investing is about weighing risks versus rewards. And right now, the risks are alarmingly high. Pi Network's story isn't over yet. But as it stands today, it's a cautionary tale for anyone entering the crypto space. The harsh reality is that not every project with a big following or a strong narrative will succeed. And sometimes, the projects that seem the most promising at first are the ones that struggle the most once the real work begins. Whether Pi Network will eventually turn things around and fulfill its early promises remains to be seen. But one thing is certain, it has a long, uphill battle ahead. Pi Network is a story of massive potential, hanging by a thread. It's a cautionary tale about what happens when hype outweighs real progress. Will Pi Network turn it around, or are we witnessing one of the biggest missed opportunities in crypto history? Only time will tell. But one thing's for sure, I'll be right here tracking every move, and you won't want to miss what's coming next. So hit that like button if you found this breakdown helpful, subscribe for real-time crypto updates, and drop a comment below. Are you still holding your Pi, or have you already moved on? Let's get the conversation started.